What's up, everybody? This is Lamine from investingsimplified.net. Today is Saturday, August 7th, 2021. Welcome to our weekend market analysis. Starting with the ES Daily, as we can see here, it's the same. Market really has not made any progress. We continue to consolidate in this trading range. Almost 10 days now. Market kind of pushed through the range yesterday. However, the breakout to me is really not convincing yet. So we'll need to pay attention here to see which way market wants to go. If market can continue to push higher here, great. We'll monitor this upper trend line as a potential resistance level to see if market is going to find any rejection there. In the event market quickly roll over Sunday night into Monday open, first key level is the 20-day moving average, which is right around 43.75. This blue line here, a break there. Expect S&P to come towards this 50-day and this prior breakout level that we have identified weeks ago. So it's really nothing new here. Market has been going sideways, digesting, and eventually we will see a breakout either to the upside or to the downside. So let's jump to NQ. Looking at NQ, as we can see, NQ pullback on Friday was the weakest among all the major indices. However, as we can see, the trend remains intact. Any immediate weakness, pay attention to the 20-day moving average, which is right around 14,930 up to 14,780 zone. A break there, we will be expecting NQ to potentially pull towards the 50-day and the July 19th low. So these are the two key levels that we'll be monitoring going into next week trading to see if tech can rebound here and start to move towards this trend line, or are we going to get an immediate weakness and then potentially test July 27 low or July 19th low. We'll keep an eye on and see which way market wants to go. So let's jump to TNX and the dollar index. Looking at TNX, as we can see, TNX remains in a sideways trading range. Upper end of the range 1.30, lower end of the range 1.12. Since we identified a temporal low on July 20th, market has been going sideways. So there hasn't been any directional move. Yes, on Friday, TNX rallied almost 6% due to the strong job numbers. If next week TNX is able to break above this resistance level 1.13, expect a significant move higher. It doesn't mean that it's going to happen one day or 1 week. When market does break out, expect a back test and then ultimately a significant move higher. However, for whatever reason, if we get a rejection right around this 1.30 level next week and markets start to roll over and come to this support level, if we break this support level, expect a breakdown, a back test, and a significant move lower, which will indicate to us that something is definitely troubling in the economy and we need to favor growth over value, because right now we favor value over growth, which is the rate that makes that determination how our portfolio should be allocated. So with that, let's jump to the dollar index. Okay, looking at the dollar index, as we can see here on a daily time scale, dollar pulled back towards the 50-day and this 91.50 zone that we have identified, but it didn't exactly get there. It stopped right around 91.80 zone and then bounced on Friday. Dollar had a huge move due to the strong job report that came out. So now, which means that kind of put Fed in the box. As we identified last week, we indicated that Fed, their mandate is maximum employment and price stability. And they indicated to us that their inflation side, they're pretty much close to their target. They're waiting for job market to improve. So now we get in strong job report, and some of the Fed governors indicated that if we see a strong job report consistently for like 2 months, likelihood they will start tapering, or they will announce the tapering time frame in September. So that gave a boost to the dollar and the interest rates. However, we are still in no man's land. Dollar is still in sideways, 93.5 to about 91.50. A significant break above 93.50, I'll say okay, definitely dollar is on its way. But who knows? We could continue to push here and then dollar might get rejected and roll over if we start to see some disappointing data from now until about September. Who knows? So we'll continue to keep an eye on that. So let's take a look at Tesla and Apple. Looking at the daily time scale of Tesla, as we can see here, Tesla peaked back in January and has been correcting since then. It finally broke out of this symmetrical triangle back in June, but has consolidated consolidated ever since. Recently, on August 2nd, Tesla broke out of this consolidation range and started to backtest. So our strategy, buy on weakness as long as 690 to 700 support level holds. If we break back into the trading range, cut the trade and expect Tesla to come down towards this lower 600 range. That's our strategy going forward. As long as Tesla remain between 625 to about 700, it's nothing to do there. It's a consolidation, but if the 690 to 700 level hold as support, expect Tesla to start to move higher. First target right around 800. If that level gets taken out, expect the all-time high to get tested. How long remains to be seen. So let's jump to Apple. Looking at the daily time scale of Apple, as we can see here, since we identified this consolidation, Apple continued to ping pong between 150 and 141 level. Any meaningful break to the downside, expect the 135 zone to be tested on the 50-day. This is what we are hoping for. However, market is going to do what market wants to do. But if we break to the upside, expect Apple to continue to move higher. So there's really nothing here. Apple continue to chop around between 141 and 150. Consolidation eventually leads to expansion. Which way that expansion is going to be, either to the downside or to the upside, remains to be seen. We favor upside because the trend is still intact. However, a pullback towards 135, it's really not out of the realm of possibility. So we'll continue to keep an eye on a break below 141. Expect Apple to come to a minimum 135. A break above 150, expect Apple to tag this trend line, if not higher. So with that, we'll end the review here. If you enjoyed the video, give us a like, subscribe, share with friends. Please note, anything stated here is our opinion. It's not a recommendation to buy or sell any securities. With that, we hope you all have a blessed weekend. Bye for now.